All right, are you guys ready to hear my super secret day trading strategy? Well, prepare yourself for mild disappointment. I'm just kidding, but seriously, the strategy I'm about to tell you is gold, but a lot of beginners are going to think that it's either too simple and boring, or they're going to overcomplicate it by overthinking. But I'm going to try my best to explain it in a way that would have gotten the point across to myself back in the day when I first started. First of all, make sure you've already honed into a good market and type of stock that you like to trade, and that you already have a good risk management strategy. It's important to remember that a trader's technical strategy is only one piece of the puzzle that makes a profitable day trader, the other pieces being a trader's risk management and trade management strategies that both help you have small losses and huge winners to gain a better risk to reward ratio, as well as a day trader's mindset that helps a trader follow their rules, think clearly, and identify good trades from bad trades. It's also important to remember that we aren't looking for a perfect holy grail technical strategy so that we can catch every movement of the market or be right all the time. There isn't a way to be right all the time or to know every movement of the market. That's not our job as a day trader. A day trader's job is to make sure that every trade we enter makes more money than we're risking, and that has a high probability of getting to that profit target. This means that if a trade has only a 20% chance of hitting the profit target before hitting the stop loss, then a trader would need to make at least 5 times the return to make this a viable strategy. That's because if you made $5 every time you were right, and lost $1 every time you're wrong, and you were right 1 out of 5 times or 20% of the time, you would still be profitable with this strategy. But if you only made $3 every time you were right, and you were right 1 out of 5 times, this would be a failing strategy. So, for example, if we're looking for a technical setup that gets to our profit target at least 50% of the time, and you hold out for 3R, or 3 times what you're risking, you'll have a winning edge and be a profitable trader. So don't go spending all your time obsessing over finding the holy grail of technicals or trying to be right 90% of the time, because that's not what makes a profitable day trader. And besides, it's important that a technical strategy is simple and easy, so you know exactly what you're looking for and exactly how to trade it, so you can easily exploit that edge with consistency again and again and again, which you're not going to be able to do with some overly complicated technical strategy you created in pursuit of the holy grail of technical strategy. What I'm trying to say is that you need a very simple strategy, and a very simple strategy is not going to be right 90% of the time. The market is random. You're just going to have to accept that and be okay with being wrong a lot of the time. In fact, I would say that as long as you're getting like that 35 or 40% accuracy of getting to your profit target on a trade, then you're going to be able to make a lot of money profitably very easily and very consistently. Because if you're right 35 or 40% of the time, and you're making 3 times as much money as you risk, you're going to be a very profitable trader. But know that accuracy and how much money you make, or your profit ratio, they're inversely related, which means that the more profit you hold out for, so 5R, 10R, the less likely you are to reach that profit target, and the higher likelihood you'll have of your trade hitting your stop loss. All right, so as you know, I get off topic a lot, but there's a lot to teach in day trading, so let's get back to it. So here's what my swing trading strategy looks like. It usually starts off with me looking through a few charts on the daily time frame on stocks from a sector of the market I've honed into, such as tech stocks like NIO, Tesla, or some other stock that has recently come to mind in that sector. Maybe it's because I hadn't thought about it in a while. Maybe I was just checking in. Maybe it happened to have news recently this week, or maybe even in the morning right before market open. Maybe it just had earnings, or maybe one of my alerts that I already set up was triggered when it hit a specific price level. It doesn't really matter how it comes to my attention. The point is that I'll be looking through my charts on the daily time frame, and a lot of these charts may look pretty messy. All right, so for example, you can see that a lot of these are pretty choppy, pretty useless. They're not really following things very properly. So let's say I was just looking through charts, or one of them had news, so I pulled one up. You can see here Paramount. This is a pretty nonsense chart. I mean, yeah, you could draw some trend lines here. So, I mean, you could see it was in like a general trend, and then it went into consolidation and broke out. But the point is, something like this, is it really clear enough? Is it really what we want? Is this really the best that we can do? I don't think so. This is pretty just choppy. You can see that clearly it's not being day traded very well, at least not before it had earnings. And that's because you can see that it forms some patterns, breaks out, comes back, so it's just a fake out, and then just randomly like bounces around again. Like this is not moving very smoothly or coherently, so this is not really something that I'd be interested in trading. Yet again, here with Airbnb, you can see that, yeah, I mean, it's been in this range, so like maybe if it broke out above this range here, maybe I'd be interested. And you already see that we broke out here and that it was another fake out, because lately the markets have been insanely choppy, going into a recession, coming out of a bear market at the same time. But what we're seeing here is there's no clear trend. It's not even bouncing back and forth coherently between the price levels. I mean, what is this? Is this like trending towards the price level? Like, that's not what I'm looking for. This is not a very good setup. And by the time it broke out either high or low, it would already be so overextended and it's so choppy that it'll probably just come back into the range. So this is really not something that I'm looking for whatsoever. Here with Schwab, this is a little better. There's a few reasons why. So one, it was trending in a pretty clear pattern, and right about here when it broke out, that's a good sign. That doesn't necessarily mean that that's something that I would take here. However, it broke out of this pattern while also having news on why it should go lower, which was the banking crisis. But as you can see, it broke out, created this trend, and then started consolidating. So now this is something I'm interested in. And the reason why is because it has now been day traded. Like, we can tell that people are actually interested in this. It's actually following patterns. It's getting a lot of momentum. It's moving around a lot. And now it's consolidating in a pattern where you can see people are buying it here at this price level. And at the same time, we have this descending angle here. So what I'm going to do is I would be happy to buy it once it goes up, once it breaks out of this pattern. Or I'd be looking to short it once it breaks down. However, there's a bit more to my strategy. I don't like to just buy or sell blindly. So what I'm going to do is I will always set price alerts at these. And the reason why is because sometimes you can wake up the next morning and the stock will have gone up a whole bunch or down a whole bunch. And I don't want to be a part of that. I don't want, if it opens 10% lower, I don't want to short sell by having like a trade ticket that's left overnight that's going to open up 10% lower. You could use a limit order on that, but I'd much rather just keep it safe. And what I'm going to do is I'll create an alert here. So that's going to be an alert once the stock price breaks out above here. And the reason why I also like alerts is because once it gets to those levels, I can then see if there's any news happening that might also pertain to the direction it's going. So like if it breaks down here and has bad news, that would give me a little more reason to short. Whereas if the market is recovering at the same time while it breaks out, I might be more interested in buying. Whereas if it gets up to this level and the market's still overall very choppy and things are very concerning, I would probably not enter a breakout trade up here. I'd just look for a better trade on something that actually confers more with what I'm looking for and my beliefs. And now another great example of something that I might be interested in at the moment. Since the market has been so choppy, I'm not very interested in buying into breakouts right now, because most of the time it's probably just going to reverse. So instead, what I'm going to be looking for is a bit of a reversal, which normally I don't recommend, but markets have been very choppy and we're really not going to find a direction that soon. So I'd much rather play it safe and go for reversals. So here, as you can see, we have Tesla, which has been trending down, but is one of the most notoriously choppy stocks for always fighting back every time it goes down. People always buy the dips on Tesla. And right now it has consolidated into this nice, smaller, more concise pattern, which is really nice. It's always nice to find a stock that is actually following patterns because people are trading it. So as you can see here, it came down to this price level and now it is broken out of consolidation. So I'm very interested in this. This would be a good buy. Yet again, you can just ignore the indicators. These are just the moving averages that I use for reference. They're basically like training wheels. I just kind of like to use them in general. And yes, you're going to find some resistance along the way. Like you could say that like this could be resistance, so on and so forth. But honestly, you're not going to want to think too much about that kind of stuff, because you'll always find resistance and reasons why something should go down or why it should go up. But that's exactly why you want to make this as clear and simple as possible. All I know is that we are at the bottom of some support here, and that I see that is breaking out right here of this pattern. So now I'm interested, where I'm going to enter a position and hold it for at least 3R. So I'm going to be looking for a profit right around here. And with this entry of about $167 with a stop loss of about $155, we're talking about a $12 stop. So at least 3 times that is what I'm looking for. So another $36 would put us out to about 207, which actually just happens to be exactly how far away it is. So you could still get away with entering a position here with a good size stop loss and still have a good risk to reward ratio that would have probably a fair accuracy on that. Worst case scenario, most likely you'll maybe have to take some profit when it turns around against you because it doesn't quite make it to your profit target, but like that'll still be a win. It's going to be a good likelihood that this trade will work out. And also, as you know, as far as it goes with adding into trades, I mostly add into trades on something that's trending, whereas this one's not trending. So maybe I would use some other price level. So if it broke out here, up here, if it like consolidated a little bit and then moved up higher, I'd probably enter more into that position, but I'm not going to keep entering and adding every 1R of profit just because it's not trending. This is a choppier stock on an actual pattern rather than an actual trend. And since it's not trending, I'm not going to try to add aggressively into it as I would with a normal trend. I'm just going to leave it be, add maybe once, maybe twice. That way, once it gets up here, worst case scenario, I would break even or just walk away with a small winner, or best case scenario, I walk away with the 2 or 3 times winner because I've been adding into it. So it's a pretty safe strategy. So always look to be scaling into your trades unless it's something insanely choppy. In fact, I just won't even trade something super choppy, as you can see. All right, so I got off topic again, as I do. I didn't want to leave anything to the imagination. I want to make sure I'm explaining everything thoroughly. So let's get back to the regular programming. So I think nothing of those choppy stocks I showed you, those ones like Paramount, Airbnb, when you see something like that, it's just completely irrelevant. Just keep on moving, move on to other trades, because it's super important that you do not get sucked into trying to find a trade or find a reason why a stock may move in a certain way. That will only make you extremely biased and cause you to force trades and cause emotional tilt that will affect your trade. For example, if you're using fundamentals or news, which is a big no-no in day trading, if you're using that to base your decision on something and the stock is going the opposite direction against fundamentals and against that news, you may very well keep adding into a losing position, not closing out on your stop loss, maybe not even setting a stop loss. You're going to be arguing with that stock all day long. So just let it go, focus on the technicals, focus on these simple setups, and focus on your initial trade, how you entered it, where your stop loss is, and where your profit target is. Look for these very clean setups, avoid these choppy stocks that are clearly not making sense, and this will help you so much when day trading and picking charts. I've made a bunch of other videos going over trade setups and my thought process in great detail, so please just check those out if you're interested. And now go out there and get clear on exactly what you'll trade and how you'll trade it. And until next time, keep it simple, take it easy on yourself. You never know when the day will come that you suddenly all clicks and your life changes forever. See you next time.